So this is exactly what's going on with some of the most horrendous crypto price action we've ever seen. Oracle stock dips 5% as Blue Owl Capital pulls out of funding $10 billion data centers. Interest rates are starting to bite, even big cap tech. So if you want to know what's been happening in crypto and in markets, it's been a roller coaster, and this is the 10-year bond yield making a roller coaster move, right? If you want to know why December markets were terrible, it's because the 10-year bond did this. It's starting to roll over. So what comes next? Well, Bitcoin is steady at 86,000. Trump says new Fed chair will cut rates by a lot. So the U.S. government sees what's happening. They're coming out to try to pacify markets. November's inflation report is the first to be released after the shutdown. Here's what to expect. So on Thursday, we get an inflation report. If it comes in higher than expected, it means interest rates have to stay higher for longer, and you can already see the economy start to unravel because of high interest rates. So we really don't want a high inflation report. If that happens, then we could get a 50% cliff of doom like we see normally in crypto, right? Like back here, the previous bull market, some bad news sent Solana down 50%. Well, here we are again. Could we get a cliff of doom if we get that high inflation reading? If people think inflation's stickier for longer, interest rates are going to stay high, well, we get that cliff of doom. If the inflation rate comes in super low, expect a massive pump in these assets because it means rates are coming down. So at the end of the day, it's all riding on the macro situation and inflation and interest rates. But if inflation comes in lower than expected, which is very possible, then we could get a massive pump in these assets. So it's just a waiting game at this point. By the time you've seen this video, you've probably already seen the inflation report come out. You've already seen the impact, but the market is very tightly wound right now.